from the Citizens MPC. But one of the other factors that has spooked the global markets is that has been the yen carry trade, which has been in focus over the last few sessions, as the yen has appreciated sharply after the Bank of Japan raised interest rates and reduced bond purchases. Now, this has caused investors to unwind their positions. Now, how is all of this affecting the global markets? Prashant is here to explain all of that. Prashant.
Hormuz, whenever markets sell off, and we've not had big market sell-offs for a long time now, but I remember over the last 15 odd years, whenever markets used to sell off, people used to go to the yen, unwind of the yen carry trade immediately. Is that happening? So I always resisted the temptation to do that, to blame it on the unwind of this carry trade. But the fact is that we've actually seen an astounding move on the yen. Let me just begin by telling you what is the yen carry trade. It is essentially borrowing cheaply in yen because interest rates in Japan have been near zero for 25 years, and then investing it higher yielding assets, be it stocks, futures, bonds, currencies, anything around the world. Anything which gives you more than 0.5%. You assume currency risk, of course, and then you invest it and you make returns. This is anecdotal, but a lot of Japanese retail money has come via that route because, I mean, the difference exists into India as well. So that is the yen carry trade. Why are we talking about whether it is unwinding? Is because the yen has gone from 162 early July to 142. I mean, basically, it has rallied, 10% plus 12% in the last 1 month. A currency has rallied that much, and not some piddly sort of frontier market. This is Japan we're talking about, and that's the move we've seen. What has also happened is that government bond yields in Japan have gone up and yields in other markets have come down. So the spread, the differential between the government bond yields in Japan and other places also came down. And it reduced the attractiveness of trying to buy other assets using cheaper yen. What has triggered this, of course, is that the Bank of Japan started hiking interest rates. We saw 2 hikes, and the assumption was that Bank of Japan is the start of a hiking cycle at a time when the rest of the world is actually thinking about when will rate cuts come. So Japan was going one way, the rest of the world was going the other way. And that has triggered this massive move in the currency. So think about it. I mean, if you borrowed cheaply in yen and if you've invested elsewhere, and the currency moves, I mean, USDJPY has moved 20 yen in the last 1 month. You are essentially looking at massive mark-to-market hits, and that basically forces one to unwind positions willingly or otherwise. And that is essentially what supposedly is happening around the world. There's no way to really confirm this. I mean, I've tried many times in the past also to get a sense of what is the size of this carry trade globally. But you get all kinds of numbers, but presumably it's in the hundreds of billions of dollars because markets themselves have become so big. And of course, they're so interlinked now. So that is essentially the fear what is happening right now. What will stop this? The Bank of Japan itself, I mean, its hiking campaign is, according to me, dead in water. I mean, they cannot hike anymore. Perhaps we should be looking at intervention in financial markets. So will the yen stabilize? I think that will give some comfort going forward. Back to you.
Okay, thanks a lot for that. Well,